We've got the RBA meeting today, possibly an interest rate rise after the inflation prints. But what we're looking at today is zeroing in on the behaviour of the markets, the indices, what they're doing as they're pulling back from these recent highs, as well as looking at where Gary Glover's focusing his attention to his next trading shares. With that lead in, we say good morning, Gary Glover from Novus Capital. How are you?
Oh, good, Chris. I'm good.
So the markets, how they're behaving, how they're coming back and what they're retracing, that's really the character that's in question here. You look at some of the models, you look at some of the patterns and the cycles, and you have said, seeing this as a bit of a period of weakness, choppiness a few months ago, you sort of signaled this. Is it unfolding to plan, or what's it looking like to you?
Yeah, it is unfolding the plan here. The only difference I'll say is that in August there, when we sort of tipped over and then we rebounded back to make our first lower high, was that bounce back was on pretty light volume. Yeah, that little bounce back there, first little B wave was on pretty light volume. So sort of like we tipped over out of the range, came back, retested, the volumes were quite light, and then it rolled off and made our C wave, and then on we go again. So we're looking for sort of something uniform around the same sort of size. Maybe use up a bit more time here to bounce back here. So, did trade that first leg down with some snares and B-bars. We got our 8% decline, which we're sort of looking for into the sort of midterm year. We just need a bit of a breather in the middle of the year. But this rally so far, Chris, has been a little stronger than I thought it might have been. And the volumes have been a little bit more robust than they should be if this is a B wave. So that's just telling me don't be in a rush to short this market here. We want to sort of see some weakness here first. So at this stage there, it's actually showing a little bit more strength than it should do if this is a proper B wave. So not to say still favour a sort of a messy corrective decline here, but has bounced back pretty strong. Volume's been pretty healthy, so not giving us the classic sort of weak B leg there. So so this stage here, I'm definitely not in a rush to get that sort of put a short back on there. So still think we might see a bit of a messy decline here, but maybe we're going to see something a bit more sideways here rather than downward. What if we, the 60-year cycle actually expanded. So pull back something like, 6 or 8%, expanded to a new high, pull back slightly larger, went to a new low again, and then expanded back again to a new high, and then had a bigger correction back to new low. That was a 60-year pattern, and then the rest of the year went up again. So that was unusual, but it does happen. The weird thing is this is actually showing the sort of strength where that might actually happen. So, it's a bit robust there. But look, we can only sort of trade what's in front of us, and we're getting a few little triggers here and there. So like it's not giving me the classic sort of weak B wave here that you'd like to see here. So, but I still think we're still due for a bit of some sort of sideways or a corrective pattern or just something a bit longer here. So maybe we're going to get that broadening top here like this, what sort of here. I mean, what the market's done this year has gone against most of the other cycles. It's the 60-year cycle is really that's the one that it has followed so far. So maybe we're going to do something similar. Who knows?
So that's the NASDAQ. Does that also work for when you're talking about the SNAS and possibly B-bars?
Yeah.
Would that be a similar possible thing for the S&P? Because these charts noticeably different and more extended.
Yeah.
On the eyes. So does it fit into the same 60-year cycle, how it's unfolding in the strength of the B wave?
Yeah, this one here is probably more sort of classic sort of so far. Again, like the volumes, probably not as weak as probably I was expecting. I was expecting a bit of a B wave with some weaker volume there, or at least the volume to sort of dry out as we sort of got higher here. So it's come off a little bit, but still reasonably robust there. It's just nowhere near as weak as it was in the last corrective pattern. So maybe the last one was a bit obvious, but this one's a bit less obvious here. So I still think we'll sort of see a bit of a pullback there, or maybe a bit of a, but it showed so far it's actually just showing a little bit more support than I thought. I do have some timing this week, Chris, as well. That's that sort of 41-week cycle there. So we have sort of got high to low and then low to high and then potentially high to high. So look, it's not a new high, a new low here over, but it could just be a pivot point as well. So just sort of something to monitor there for me. But this stage, market's just showing a little bit more strength than I thought it might. So, but yeah, I'm just probably treading a little careful there. It's a few longs out there still catching my attention. Stick with those, and I'm in no rush to put that short back on at this stage here until I sort of see some more signs of weakness there.
Right. Well, we'll jump to those longs in a minute. Before we do, let's have a look at the Aussie, because we've noted for, months now it's been adjusting to beat at its own drum, slightly different to what the rest of the industry is doing. We've got that disconnect. We've come back into that zone that you highlighted, sort of has been resistance, now support, and seems to have gone through it, but then turned around to somewhat stabilise. Is that probably shortly lived? Will no doubt move.
That 3 weeks, like the last 3 weeks, it's bounced off that level, isn't it? So it's just held that level there. I mean, literally last week was just like sat right in the pocket of that range, really tight index range. I mean, that's probably the tightest range here we've had for a long, long time on the index. So it's interesting here. So it's still pretty messy there. I don't see a big correction there. I think maybe the US market did have another leg down. It might come back to 7,400, but so far we're sort of holding this little range here. So you remember the Nikkei, I think, burst through the top, came back, I think, something like 12 weeks, retested the high, and then went again. So, why can't we do that? That's possible, but some things look a little elevated here, but maybe some other sectors are going to come to life. Who knows? So definitely things like maybe healthcare, maybe lithium, few sectors that have been maybe on the lower side here, maybe they can come to life and do a little bit of, carrying here. But yeah, we'll see.
Right. Well, the last one on the industry side of things, Dow Jones, the oldest indices world, is that fitting in with the S&P 500, the NASDAQ that you were talking about before, 60-year cycle, possibly that megaphone kind of probably top? Or is what are the volumes saying to you on the Dow?
Yeah, it's looking more like the B wave there. Again, you'd probably prefer to see a lot of volumes on that B wave there. Maybe it's going to hang around a bit longer yet, but yeah, I mean, it did sort of roll off there pretty impulsive. The volumes are reasonably heavy on that the roll off there, but they did jump in here on this decline as well. So there have been a few sort of stronger days up as well. So just shows there's still a bit of money on the sideline there, Chris. Probably happy to buy the dip there, which maybe just confirms the fact that once we do get down to the maybe a little bit lower here, that it won't go too much, won't go that deep, So there's always a chance that 8% we've already had is, why can't that just be the low and then away we go again? Could possibly be the case, but it's unusual. It's not usually how they're set up, but it's been an unusual year, so maybe the unusuality will continue. But yeah, it is probably more common to sort of see a little bit of a three-legged, ABC type of correction. So we'll be patient there. But yeah, so we're just going to trade what's in front of us here at the moment. So yeah.
Well, what's in front of us? We'll look at within the market for the trading opportunities and come towards lithium right at the very end. But starting off echoing what you'd said on Friday when we looked at the top 30 list, 30 momentum leaders and the launchpad companies. You did mention a few things, and in the last week interviews, you talked about PXA, and we're seeing this set up with higher lows. Is that what's happening here with this green line on the bottom?
That's right, yeah. So we've got two high lows here now. We've got we've got three new. Also, we've got, sort of two new sort of highs as well. So basically breaking above the previous high. So just got, pretty constructive price action building here. Good volume as well, sort of coming in at those lows and driving through. And I think now we've got, I think this is what I consider to be game changer sort of news there for the company there. Doing a deal with NatWest Bank there. Basically, if you know anything about UK mortgages there, it's a challenging environment there. It's just, that you can pull out of the deal right up to the, last day or two there. Just a messy process there. So NatWest Bank are basically, sign an intent there to move to 48-hour digital settlements there, which will be, just be a bit of a game changer for that entire market. In terms of sort of client settlement process there, it'll just make it a lot easier, faster, safer, less messy, less challenging there. So, if anything like the Aussie market, once one bank moves in that direction, I just can't see how the rest might follow there. So I was always wondering whether PXA would break into. Just reminds me of a little bit of computer share. Remember computer share obviously cracking into the US. Obviously some risk going to a new market, like a lot of fails, a lot of firms have failed, spent a lot of money, but does look like PXA have sort of got that first decent deal over the line there. I just think that, it just reminds me of computer share here as sort of going into a new frontier with something which is, way ahead of the pack. So I think PXA is just, way ahead of what's available in the UK. So I'd see how all the other banks aren't going to jump on board, Chris. And that's just, I don't know, I'm probably jumping to too many conclusions there, but you got to have your investment thesis. And price action looks really good. And I think we've got some pretty good news as well. So I just can't see how this, I just think this will just climb. It's not a bit of a jump here. I know it doesn't feel like a great entry, but oftentimes when I see these sort of breakouts go to new high, they'll just have that big surge and then they'll just sort of, trade up on a, grind sort of slightly. Yeah, just week after week, they'll just grind higher and you look back and go, I should have bought that.
That was a good opportunity at $13.50.
Yeah. So, I mean, this got to almost $21 there. Going back to 22 there. And this is, prior to any sort of deal getting done here. So, I mean, you could have basically waiting for confirmation that they're, got entry into the UK done. So, looks pretty good to me.
So that's positive for PXA. Moving to PLS, so Pilbara Minerals, popular name for a lot of traders looking at lithium markets. We've got this, you've got the green lines, so 0 being the height and the low that it was at before it rallied to the heights. You're looking at the retracement from the high here. So the A leg came down below the 50%, rallied back up to B, and then came down towards the 61.8. That 61.8 became support later on, and then somewhat bit of support here. So we've got like a 0, 1, 2, or is it the A, B, and C? What's catching your eye in this?
Yeah, so you got the big Fibonacci level, which is hold. I had a few touches there, so that's definitely, we know price will come back to those old levels. So we've got a bit of a false break on here as well, but the key Fibonacci level retests of that. What I like there is that I think that's a nice exhaustive pattern there, pretty deep volume into that low there. And after that, since we've been building, so basically got a first high low, we've got a second high low, third high low building here. So just got really sort of constructive there. We're seeing good volume come in on the rally, and then we're seeing that volume dry up on the pullback. So technically it looks pretty good. We know this is one of the lowest cost producers in that space. They're probably the lead up the industry. So, we want to be traded the leader, Chris, as we know. And just showing pretty firm price action so far. So a little bit, some of the lithium names actually all starting to turn up here, starting to build. But this one's definitely a little bit more advanced than the others there. Big short position out there as well probably helps this one. Starts to sort of dry them up. The shorts will get squeezed there and put it on. So, but I do like this one here. I just started to see that if you look at the lithium price and stuff as well, they're sort of coming up. They've had a pretty large correction. Just starting to turn up here. I know it's early signs there, but if you're pretty buoyant about commodities in general, as I am, then after you've had that long sort of corrective process, start to turn back up again. We'll sort of build there. So, just look at, I think you'll see a few. I've noticed these things tend to sort of, they're a bit of a messy build. They tend to sort of go up and down a little bit, but just keep building high, low, So if you go back and look at how PLS trades, tends to sort of have that sort of messy sort of behaviour, but does sort of keep, building high lows. So key there is just to sort of keep, as we've now got, this is probably one of my biggest positions, but now I can start to move my stops basically up to break even, sort of start, as we get higher and higher lows there, move them up there as well. So really should get to that stage now where we've almost got a free trade on here. If it all goes pear-shaped, then we don't lose anything. But if it kicks on here, then we got everything to win here. So we've sort of got our trade, and as a trader, all we can do is follow our rules and process. If it turns back down again and breaks, the market goes the wrong way, then that's it. We followed our process there. But this is a sort of stage what we want to do. We want to get good position on, good trades, all sets up the right way, scale up, build a position, get ourselves to break even, and then hopefully leave ourselves a chance to win. That's all we can do.
Sounds like a winning formula.
Yes, that's right. Yeah.
If only you were giving a presentation on how the greatest traders have traded in history, maybe in the next week or so, we could go along and see it. Just on that, we will put a link below for Gary's presentation in Adelaide. But before we do that, we're going to look at the other trading shares. Jumbo Interactive is also on the list. You've looked at this a few times in the last month or so, how it's setting up, how it's rallying, and the behaviour. Like to read, it looks very constructive here. So what is it that you're trading? What is it that really sets you up to get behind this one?
Yeah, I have sort of jumped in here. I was sort of watching this there. I was a bit worried about the market overall, but the market's sort of showing a bit more strength than I thought. This actually did sort of break a little bit lower there, but then just fully recovered and the volume sort of came in. So, I think that's really pretty impulsive move up, pretty good volume, pull back a less volume here. Still sitting on top of the previous high there. Just gave me the green light there. It's a nice little, got a pretty good entry here, I feel like, and we've got a pretty tight stop here at just under the last low. So good risk reward trade in my opinion. So if I'm wrong here, then, not a big loss. If I'm right here, then we should have a pretty healthy gain. So that's, again, as traders there, that's what we're looking for there. But yeah, good company. I feel like this one's a bit of a recession-proof stock as well there, Chris, as well. So if we do go into some sort of slowdown there, that recessionary fears do sort of, jump a little bit there. I think it is a sort of stock that, people like want
to win lotto.
Yeah, exactly right. So, I feel like it's sort of got some good qualities there as well.
Right, so that's a good one watching there, Jumbo Interactive. John Lyng Group, we've talked about this one before, where there's natural catastrophes there that want to come in after insurance and assessors, they quite often get work for the reconstruction, improvement, or redevelopment. It's not really like you're banking on a natural disaster, but it's been a well-run company. So,
yeah. But we do have, well, it is. I mean, it is. It definitely is. I'm in Melbourne here now, but I know my girls are in Sydney. But I mean, you guys have had like 8 or 9 days of just relentless rain here, and I think you've still got another week or so to go here. So, that we've definitely had a lot more weather events around Australia here, because of the weather patterns there. So that's good for the John Lyngs there. They do all the insurance work there. So pretty buoyant company. Obviously, what's happening environmentally is obviously it's only just going to be positive for them, but their trajectory's been pretty bullish anyway, Chris. I think they're forecast to sort of still grow another next couple of years, still sort of forecast to sort of keep growing here. You'll see there the price got ahead of itself, and now we've gone through a bit of a sideways corrective process after that massive move there. So maybe it's sort of slowed up there, but it's still sort of growing. So you might sort of see this here. I just think this has sort of come back to a regional level here. I think we did break last week's high there as well, which I always like to sort of see a little mini break there. I think this looks quite good here. So looks good for a move back up to that high there anyway.
Right, so that's JLG. Next on your list, Woodside, WDS. Not always you get such a large company on the list, but we've got the Fibonacci one lines back here again. So 50% retracement is where we've come back to, from the lows to where the highs have they made their way to just last week. what happens at 50% and why is it catching your attention?
It's funny, I've had a lot of clients over the last 2 or 3 months ask about the stock, as a time to buy, because it's been coming up for a while. And obviously the energy sector's been on fire. They had some pretty strong moves there, but this is not trading well, Chris. And this has been usually the leader of in that sort of sector there. So, but the price action's been telling you not to run in here. It's been pretty weak here. So acting like a laggard, which is a bit of a negative. So that, you want to be sort of looking at the sort of stronger stocks typically. But we do know sometimes it does change there. We saw something with Dicker Data there where the IT sector was on fire. Dicker Data continued to go down while everything else was going up. But then eventually it did find a low, and then things turned and changed there. So Woodside potentially can do that. You got to think, okay, they did buy a lot of these BHP assets there. So it does take a while, when you make a big acquisition like that, you got to bet it down. And it can be a little bit cumbersome initially to, put pressure on that company as well. So, but so far, price action is telling us it's super cautious there. But big technical level here, 50%, come back to the old high. This is, to me, make or break area for the stock here. So this stock is going to sort of start to, turn around here and start to sort of move in the right direction. This is the level it's got to hold here. So big week ahead for this one here, big technical level there. I'm certainly not jumping in and buying this there, but I just think it's a critical week here for the stock here. So, maybe sort of one to watch here the next week or two, but we definitely want to sort of start to see some signs of strength. Otherwise, we're looking at next level's probably back to $24 there if we don't hold here, Chris.
Right, 61.8 retracement.
Yeah.
Like we should concern investors if that comes to bolt. But we round out the list and look at the last one that we've got on here. So we had a lithium name in there before. You said they could be lighting up. They could be the ones taking over the rally, the battle, the weight of lifting the market. Lithium company, energy and lithium group, Vulcan Energy. This is not the most inspiring chart to look at it on the weekly schedule, but clearly you're seeing something happening here, possibly a base.
Yeah, a couple of things there. We've got a sort of descending wedge, sort of, quite a large pattern there for quite a while. The smaller range and bigger ranges there, and we are sort of just starting to break out of that, which is sort of interesting. I think it's probably a little bit more interesting to me is the volume. So we are sort of starting to see some pretty big volume sort of coming in there, which we haven't seen pretty much for quite a while here. And we're just starting to sort of maybe start to see it, that on the daily there, you can see that little setup there, sort of nice BCP in there, Chris, as well. So we have broken above the 50-day moving average, come back, retested it, gone back up, I think went to 360, come back to 250, hit the 50, bounced off the 50, went back to 360, come back to the 20-day moving average, I think around about $3. And now we're sort of turned back up again. We're just tightening up here under I haven't broken above here yet, but whole price action is tightening there. Has seen better volumes on the rallies and then a bit lighter on the pullbacks. So, but it hasn't gone through here yet. So, some of those lithium names, some of the energy names obviously doing okay here. So, I think Vulcan's got, sort of energy and lithium sort of assets there. So, just interesting signs there, some positivity there. I do prefer to trade the stronger leaders there, but interesting sort of technical pattern there as well, just showing some, kind of nice sort of setup there, you might sort of say.
Well, that's a good one to end on the trading shares. But when we talk about your trading approach, which you have done before, last week on Friday, we talked about where you'll be discussing. Do you want to tell us what you'll be discussing at the Australian Technical Analysts Association?
I guess probably my trading journey really the last 3 years, Chris, as well. So I've probably changed myself a little bit there. I literally went out and found out who were the best traders on the planet, who trade equities. So by best, I mean guys that are getting 3-figure returns each year, which sounds pretty hard to believe, but there's plenty of them. So how are they doing it? What sort of commonalities there? And obviously one of those commonalities there is around relative strength as well. So I would really look at what relative strength means, and from a company point of view and also a sector point of view, we know sort of Stan Weinstein often sort of says that if you're buying, if you're looking at two charts there, and one's in a strong sector and the other one's not, that the returns will be substantially greater in the strong sector as well. So we're looking for relative strength and a relative strength in the sector as well to get the that super performance. So yeah, it's around that sort of concept. So that's what I've been building personally my trading around. I can tell you it's made a massive difference for me. It's more than doubled my returns previously. So yeah, I'm sort of still feel like I'm only sort of scratching the surface in terms of what it can open up. I'm still a long way away from the triple digit returns that some of these guys make, but I still look at some of those guys that have been able to sort of replicate those numbers, and they're not just doing it one-off sort of trading there. These guys are doing it consistently as well. Yeah, so I mean, I think is one case. I think Minabini averaged 220% over 5 years. I mean, he got audited by Jack Schwager and Market Wizards books. So we're looking at guys who know what they're doing. So yeah, but there's definitely a lot of commonality in those super performers. Yeah, so and how they do it, and also what's the main concept they're looking at around that relative strength as well. So just looking at that, and yeah, it's always good. Personally, it's always good to recap that, because then it just reminds you what you've been learning, what you're going through, what you need to focus on, and yeah, kind of yeah, exactly, just sort of centers you a little bit, So yeah, I had pretty good week last week, but as I mentioned to you, I made one little mistake in the last week. I fixed that, but it's what you're looking to try and do is remove all those, remove those little mistakes, and just you just really put your process, you follow it, track it, and that's it. So yeah, if anyone's interested, come out to Adelaide, or anyone who's in Adelaide, maybe. Not everyone will want to travel to Adelaide, but much as it's a beautiful place to go. But if you are local there, then yeah, if you want to come down, please come down to the ATAA presentation.
Put the link in the description below. And on that point, we'll say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Gary's mentioned a whole lot of trading setups like the 0, 1, 2, 3, and a lot of the research that and shared with us over the last couple of years. There's a playlist on the right, as well as the top 30 momentum and launchpad stocks that we've covered before on the right, and his Twitter handle over there on the left.